All right, you have this in your notes. I've given these little bits to you, but when I talked to a couple of you yesterday or who in were other classes, you agreed that you like seeing it all on one page. And we're literally just going to tell the numbers where to go. Can we try this? Find this little sheet. Pen, I'll do color. Okay. We know that these owners' equity numbers kind of get shoved in different places. We know that owner's capital is a plus that's going to go on the owner's equity statement. We know that the owner's drawing is a minus that's also going to show up on the owner's equity statement. Revenue is a plus that's actually going to show up on the income statement. And the expenses are a minus that are also going to show up on the income statement. We do the income statement first. Then we build the owner's equity statement. Finally, we build the balance sheet. And those numbers kind of fall through until they finally land on that balance sheet as a forced math number. Let's start with these two. Let me change pen colors here. So if I take my two income statement numbers and get them to the income statement, we are left with revenue exceeding expenses, which we know is called net income. Switching pen colors again. Those owner's equity numbers are going to show up on the owner's equity statement. We haven't done that together yet in class, but we will today. But notice, and I'm going to do a highlighter here. If you have a highlighter, great. That net income actually gets added on our owner's equity. Because don't they get their net income? If they had revenue exceeding expenses, they should get that as money in. So far I've been telling you there's two pluses, there's two minuses for owner's equity. But now they're getting divided out by which financial statement they're showing up on. And then, with a different highlighter, I'll change. As we figure out what the owner started with all the additions, with all the subtractions, that ends up being our forced math number on the balance sheet. And you might say, well, why didn't you start with this yesterday, Mrs. Mars? But for me to just quickly show this to you, if I haven't talked about it, wouldn't make sense either. This now becomes a lovely cheat sheet for you. Megan, you had your hand up. Morgan, Megan. What's the big plus sign for? Because we had net income. It would be under the less, yes. And you guys asked that yesterday. Because this is where we're adding things to the overall worth. Here's where we're subtracting things to the overall worth. Did this help? Yep. Okay, remember we typically won't, but I'm glad that you're analyzing that. It's kind of what was just asked. Had this been a net loss, it would be a hit against the owner, and it would show up under the less category. Rarely will it. Well, actually, in business, it happens more than you think. But in our book, it's typically net income. Good question. Should we get back to where we were yesterday? Remember, what we get through today is what your homework will be this weekend, but I don't think you're going to have much. Okay? Some of you are like, yes. All right, let's get back into where we were yesterday. Yesterday, we did the first of our three financial statements. We knew that we pulled those numbers from that book, and you might have to find that book page again. We pulled numbers from the book. We pulled what I just circled in blue up here to build the income statement. Did we have a net income? Yeah. It's really easy to look at it because if you see revenues are larger than expenses, you have net income. So is that going to be a plus or a minus on our next financial statement that we do if we have a net income? It's going to be in the plus because they get to keep their income. That makes sense. Are we going to use anything from this income statement on the next thing that we do? You suppose we are. I suppose we are. We're going to take the net income and move that number somewhere else. So remember that 2550. You can see it. Is it all on one page for you? Yeah. Oh, isn't that lovely? Have a highlighter ready because we're going to use that in a bit. So our second financial statement. Why do we even make financial statements? Whew. Sorry, that was really loud on the recording. Carrie, when you listen again. I'm sorry, you'll probably fall off your chair. We've done all the recording. That's what's in the book. I should have. Recording's going. Thank you. I know. But you're right. We are communicating internally and externally. Because if you look at the mess that's on page 37, only accounting gurus know what that means. Okay? We need to keep this very simple, very professional to whoever's looking at our financial statements. You got me confused when you said the word recording, but yes, I'm recording. Absolutely. So we're going to move on to our next one. Come on. Oh boy. Oh boy. Well, we're going to have to look at it this way. Sorry, that's really annoying, but I think you'll be okay. All right, let's first put our little headings in. On line 1. Now we're doing our second one. We're doing owner's equity. I'm really sorry it's not a full screen, but now I'm worried the recording's not going. Okay, it is. On line 1, I want you to put owner's capital, comma, beginning. We could dig deeper to find out that it's the beginning of August, but just owner's capital, comma, beginning. At the beginning of the fiscal period, whether it's a year, whether it's a month, whether it's a quarter, whatever, at the beginning, we had a number. On line 2, oh, before we do that, I want you to highlight that heading. I don't think it, oh, here we go, good. I want you to highlight that heading. On line 2, I want you to add the word add, and then go ahead and highlight just that. We're going to add some things. You can, if that helps you see the difference better. No, I'd put the add on line 2. You could put the 2 things we're going to add on line 3, 4. You'll notice my book leaves it on line 2, 3. Whatever looks cleaner to you is fine with me. Now I don't know what line you're on because if you're skipping or not. Down a ways, put the word less. And again, I don't know what line you're going to be on. You're either going to be on line, let's see, 2, 3, 4, or 4, 5, line 6, whatever you want. It's not necessarily so pertinent to what line it goes on. Just bring it down a ways. And then finally, I want you to put another heading in that reads owner's capital, comma, end. We're trying to figure out how owner's capital has changed throughout the year. What we start with, what we add, what we subtract, and then what we end with. We know that we get to add 2 things. First of all, back here, we know we get to add net income. Had that been in net loss, you guys asked really good analytical questions about that, then it would have been under the minus category. But we get to keep net income. So that's one thing. What else did the owner do throughout? What did the owner do? Did they invest in the business? They absolutely did. So let's take it one step at a time here. Our beginning amount was 0. When a business is formed, nothing is listed there. Do you have 2 columns again? Remember, the left columns, sometimes there's more than one. It's more for like the math, and then we shove the final total out there on the right. We started with nothing, you guys. Did they add an investment? How much? $15,000. That's the owner's capital column on that page. Okay? They invested $15,000 right away in the business. That's a plus. They started a business from nothing, so they had nothing to start with. They added $15,000 worth of investments. They invested from their own pocket into the business. What else do they get to add? Net income. Where are you going to get that number from? Your total from that income statement above. Notice those numbers showed up in the left column. So we can single rule and say, what was the total money in? And it happened to be $17,550. The reason we put a few numbers in the left is so we could do some math, and we put the more total type number out on the right. Would you have to put it on the same line? You wouldn't. If it would make more sense for you to put it by itself, you could do that. Were there some hits, though, against this amount? What did the owner take out of the business? Look at your little drawings. So less drawings. Now it's getting a little bit messy here. Let me clean this up. Why did we stick the 2,000 over there on the right side instead of the left side? Is there more than one thing we have to calculate on drawings? No, there was only one thing. So the 17,500 minus the drawings leaves that worth of the owner at the end, 15,500, 550, excuse me. So hidden in those 2 financial statements are the 2 pluses and the 2 minuses from that owner's capital or owner's equity. It's just that this line, I'm going to just erase all of this so it gets clean. This line right here combines a plus and minus from before. Did my cheat sheet help with this process a little bit? A little bit. Maybe some of you are still confused. Don't worry, we're going to do this many more times before you have a test. If on your sheet it would help to take, and I don't have a nice one-pager, maybe you take and draw a highlighter like what I just did with net income, and go back up to your income statement where you had the 2550 and just highlight it so you can see where that number came from. So highlight where it said net income, 2550 on your owner's equity statement, and physically with your highlighter draw back up to the income statement where you originally had 2550 and it said net income. So you can see that connect from one to the next. We're going to do the same thing again when we talk about owner's equity. Because right now the owner's capital is $15,550 that we will use somewhere else. Yes, Eli. I don't think so. Is the math wrong? I don't think so. Sometimes my answer key is wrong. Is the math wrong? My answer key sometimes. Okay, And please correct me though if you notice that, because this book author is not perfect and there's sometimes errors on my teacher stuff. Thanks though for asking. We've done 1. We've done 2. Now it's time to do the last. No. Oh shoot. Let's do the balance sheet. Oh sweet, it's on the same page for me. Good. Look what they did for you on the balance sheet. Your headings are already in. Awkwardly, they center them. I don't know why they do that. But do you see how you already have the word asset there? Do you or not? Okay, highlight the word asset. Highlight the words liabilities plus owner's equity. Okay, highlight those because those are headings. You guys, this is the easy part. These, simply look at those totals from that other one. Notice there is only 1 column for numbers. I don't know why. I don't know why mine has this one indented. I'd move that over. Okay, I'd have your just all in 1 line. You are pulling these from your transactions or the R part of the accounting process because only accountants maybe want to look at all that mess. We're making it more presentable and look nice. We already know that our total assets are $17,550, but it's just itemizing them. Please note, when you get to that total, we stop and say math above, and then when we're done with our math, we double rule. Our math is complete. Here's where accounting becomes kind of a cool, beautiful puzzle that the last piece connects in. As you do this, you know that your total liabilities on owner's equity has to be that because of ALLO. If assets are $17,550, you know that the other two have to equal $17,550. So I'll have kids on a test, their numbers are not shaking out, but they want the point. Even if you can't get the L plus OE to be $17,550, by all means put it there because you know those two have to equal, even if your numbers are fighting with each other. Okay, on to the next part. How many liabilities do we have? We just have 1. Does it say under there, is it accounts receipt or accounts payable? Is that what it's called? Okay, so what you'll do next, and I'm not even sure what line this is on, before you actually list your account payable, you put another heading in there that says liabilities. Why do you think we didn't have to put an assets heading in? Because we already had one centered. But because of this, because we're doing 2, do you see where it says liabilities and owner's equity? We have to separate them out in this section. We know that we only have 1 liability and it's accounts payable valued at $2,000. So we might be sitting there with a lot of cash and a lot of assets, but we already have 1 claim against our assets. We owe $2,000 to someone. What do you think's happening on the next line? What are we going to put? Our last heading is what? Owner's equity. Again, that becomes another heading. The only account that you're going to put inside of there is owner's capital. And you might say, whoa, lady, there's really 4 things that affect owner's capital. We have capital and drawing and revenue and expenses, but have we already wiped all that out? We did. We took care of them on the other income, or the income statement and owner's equity statement. It's messy, But that's the job of the accountant, to whittle it down to one number. What's the owner's capital number? Where do you think we're going to get that from? Look at your little cheat sheets. It's the equity that was at the end of the other one. Remember, it's forced math, folks. Let me get a different highlighter out to draw that picture. This 15,500, or the owner's capital at the end, is what comes down here. I have students screw that up, and they end up putting what the owner's capital account was. If I look in the book, it says 15,000. Well, a lot happened to that owner. They invested, but they withdrew. They got to keep their net income. And so that's why that math is forced, and I want you to see by highlight where that number came from. Yes, you got it. The cheat sheet helps you. Holy moly, we have math down there happening. So we need to single and double rule to tell the books that we single rule and double rule. I see the word and there, liabilities and, so in other words, plus. You add those two up, and here's where accountants just like do little happy dances at their desk. Because lo and behold, the assets do equal the liabilities in owner's equity. Lo and behold, I was able to make two different statements, shove numbers, squeeze numbers into all of them, and it all shakes out. That ends my lecture portion of the chapter. Last week you read the chapter and took notes. I supplemented those notes with a lecture, additional handouts, and stopped and did problems as they pertain to what I was talking about. Do you feel pretty good about it? Now it's time to put all of that into work in the form of problems. Problems take a look at all of what we did, more in a problem format, holistically, if you will. I think that's the one we're doing. Let me double check. Yep. We are going to do problem A together in class. It should be in your workbook. You'll need your book to do it though as well. There's a bunch of problems. The one I chose to have us do together is problem 1, 2. It's a lady who looks like she's probably starting some kind of business. Her name is Sue Kojima. I always like to do the A set together in class. You'll do the B set version on your own, just so you can gain that confidence. I will typically have a C set available for you if you want the extra practice, and what I'll always do is I'll give you the answer key that goes with it, so you can check your work. Okay? So when you get to page 15, it's telling you to see the appendix. So that means it's in the folded part of that back section. Likely you would see her in that folded part. Do you see problem 1 in there? So I see a do it, that's not it. I see problem 1A, that's not it. I see problem 1, 2A, Sue Kojima, looks like she's an attorney. So that's the transaction part. And then I bet the financial statements are on single pages. Is that true? Yes. All right. So you've got pages everywhere. What do we have to do first? Do we have to do the transactions first, or can we build the financial statements first? We do. We need to do the R portion of this. We need to do all the recording. From there, we can build the transactions, or build the financial statements. We're going to start with the double page spread. It's going to look like this. In the textbook, we'd look for page or problem 1-2, which is going to be on the kind of the toward the top of page 40. I think we can get this done by 10 o'clock. You don't? I'm almost certain I gave them to you. I don't know if I have extra. I'll get you one, Carter. Notice, Carter, I'll get you yours in a minute while these guys get started. Problem 1-2A, Sue Kojima, and I'm reading on page 40. Sue Kojima opened a law firm on July 1. And unlike the businesses that we've done so far, oh, okay. But do you have the big double page open one? Okay, I'll get that to you. They had balances for cash. So there's a cash balance, there's balances set up. So do you see where those balances are showing up? Please put those in on your line 1 where it says, oh, they're in there. Okay, good. Okay, perfect. Hang on just a moment. We are going to go through now the transactions, and that's where we're going to stop. Okay? Do this portion of the B problem at home this weekend. So you see how we're going to do this Sue Kojima problem 1-2A? Do the 1-2B version this weekend. Okay? Don't worry about financial statements. It'll be a great review that we do on Monday. The cool part about Monday then, we'll do the A set together in class. You'll do the B set in class while we're standing here together, and then you can see if you did it right. Right? Not to overload you, but Monday night, I will send home your practice test. So you can do that over the evening. Tuesday, we'll go through the practice test. Test is a week from today. Okay. For whatever reason, I can't do full screen, which is driving me crazy, but you can see okay, can't you? All right, let's go line by line. The nice part is I don't have to write. Hopefully it doesn't make it so I'm going so fast, but the type numbers are a little bit easier to see. So number 1, we collected $1,200 of AR. Is AR going to go up or down? Down. What are we getting as a result? Cash. Cash goes up because the AR went down. Question, are we a little mad still? Why are we just a little mad? They didn't pay the whole bill. Now what the book is going to want you to do is stop and update balances Can we skip that and just do that at the end? Okay, can we skip the balance lines? Just, it gets a little bit messy. Okay. Our next transaction. Paid. I'm going to stop there. What do we know is going to happen to cash by the word paid? Cash is going to go down. What did we do in number 2? Like number 1, someone paid their bill they owe to us. What are we doing in number 2? We're paying a bill we owed to someone. So you'll see cash go down. You're also going to see AP go down. And we were grumbling about our ARs. We're no better with our AP. Again, we're not going to worry about balances right now. Are we so far so good? What do we own with an AR? The right to get paid. We owe on any of these payables or liabilities. Number 3. Whoa, this is worded funny. We recognized revenue of $7,500, of which $3,000 is collected in cash and the remaining balance is due later. What's going to happen under owner's equity? Up in revenue by $7,500. So this attorney must have provided $7,500 worth of services. Tell me about the customer. Did they pay all of their bill? No, they gave us $3,000. Woohoo! Plus $3,000 in cash. But what's up with the plus $4,500 in AR? They didn't pay all of it, and so then that's where you had to go hunt for what they owed. What do you think the law firm is going to do? You think they're going to send that customer a bill? And maybe eventually we'll get some or all of our money. You guys were cruising. You're doing a great job. Number 4. Purchased equipment for $2,000. And did we kind of do what that customer just did to us? How much did we put down in cash? $400, and then the rest becomes an AR or AP if we owe? AP. We have to still pay that. So we gained equipment. You see a plus $2,000 in equipment. We must have given them $400 cash, so you're going to see cash go down by that much. $400 does not equal $2,000. So the rest we owe. We still have to pay. The question is 4,000, I said that wrong. Is 2,000 minus 400 equal to 1,600? That's the main thing you want to be concerned with. Again, we're not balancing, just to save time here. Number 7, we paid our salaries, we paid our rent, and we paid our advertising. Those 3 things are expenses. Notice how the book laid it out. I really like how the book laid it out for this one. We've got these 3 expenses that all goes into 1 minus cash. I think later on you're going to appreciate if we write what is what. Salaries expense, rent expense, and advertising expense. Why do you think it was wise of us to write that? Because what do you think we're going to have to do on Monday? Itemize them where? Where do expenses show up? Income statement, owner's equity statement, or balance sheet? They're going to show up on the income statement, you guys. And if we don't write what they are, we'll have to open our books and try to remember. Could we have done over here under cash minus 25, minus 9, minus 4? We could have, but the book slapped them all together. On a test, I'd take them either way. Number 6, Withdrew $700 in cash for personal use. Who withdrew $700? The owner, Sue Kojima, yes. Well, what's up with that? Can she just take money whenever she wants? Yes, she's the owner. What two things are you going to see go down now? Cash and what else? Drawing. Next one. Received $2,000 from the Standard Federal Bank. Let's stop right there. If we receive $2,000, what's happening to cash? It's going up. What else is going up? This is a little bit of a tricky one. We must have knock, 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 knock. Hello, Standard Federal Bank. We want to take out a loan from you. Maybe we're going to go buy a car or something. I don't know. So they give us cash, but that's a notes payable. Did it say notes payable? It did. On a note payable. What's more long-term, a note or an account payable? Note. Last one. You guys are rock stars here. Incurred. Boy, that seems like a weird word, doesn't it? Incurred utility expense for the month on account. So we had to pay the light bill, but did we pay it? The word on account is the one that's the hitch there. On account goes up, so accounts payable. Now, do you think we're going to pay the light bill in a fairly short amount of time? That's why it didn't show up as notes payable, you guys. It's more of a quick turnaround. And then just like we did up here, I'd put utilities next to that so we can say, oh yeah, that's right. When we make our financial statement, it's going to be a lot easier to do. Are we done? Now is when we'd add everything up. I am going to let you just have some free math there. I'm not going to make you add all of those vertically. Go ahead and put all of the totals in. No, you kind of see they do, but I'm okay with the single and double ruling not. This is more of a tool. Later on, the financial statements, yes, would need them. And as a quick checkpoint, it also tells you the ALLO, that 16,800 is assets equal liabilities plus owner's equity. That's a free answer for the test, isn't it, you guys? If you'd see that 16,800 twice, you know that's going to show up on the balance sheet. What, you don't want the lines? You aren't putting the balance in every time. I just wanted to save time and not have you do that. I want you to do problem 1, 2B, just the transactions as homework. Via Remind, I will send you your ALLO number. That way you're going to know you did your math right. Would you appreciate knowing that?